The stock market is hard. It's no secret that people spend countless hours and days, and for some people, even their careers, trying to figure out what makes stocks go up, what makes them go down, and predicting which way they're going to go in order to build wealth for themselves. Well, here with Average Andy's Dividend Investing for my first ever video, I wanted to break down how I strategically pick my stocks, what I look for when choosing a company to invest in, as well as looking at what's important to me as a dividend growth investor to ensure. In some future videos, I'll be breaking down what my portfolio looks like, where I strategically place my income, and what I really focus on as an investor right now in my mid 20s. But for today's video, I wanted to give you just a sneak peek at how I go about picking out my dividend stocks for my portfolio to ensure that I'm both getting a great return on investment as well as potential for great cash flow down the road, which is going to be money straight into my bank. Without any further ado, let's get to it. In a time where the dollar is stretched thin and the finance space is filled with get rich quick scams, settle on the average path to lasting wealth. Hi, I'm Average Andy, and join me as I talk about all things dividend investing and strive to achieve financial flexibility for myself and my family. I'm no financial advisor. This isn't financial advice, but if you love to talk dividends and want to join me on this journey, please like and subscribe to the channel. We'll be using MasterCard today as our example stock. It's one that I just recently added to my portfolio. The first thing we're going to do before we look into any of the actual financials of the company is just look at what their appreciation's been over the past 5 and 10 years. Obviously, past performance doesn't indicate future success or failures, but it's a good starting point before you really dig in and crunch the numbers for any given stock. The next thing we're going to do is head over to the dividend stats. I want to take a look at the yield for a stock. It's not my most important stat. As you can see with MasterCard, it has a 0.6% payout, but I want to make sure that it's in line with what I want. I also want to take a look at the years that it's paid out a dividend. More importantly is the CAGRs, both the 5 and the 10 year. I want to see how aggressively the dividend is growing year over year. And then finally, I also want to take a look at the revenue growth. I want to make sure that revenue is increasing over time, just to make sure that this company is going to be sustainable and it's going to continue to pay out a strong dividend as well as grow as a company. We input all these numbers into my Excel sheet. Please note for the revenue that we compare the current revenue to the 5-year average as well as the sector average. We head over to dividend safety next, which is where I probably get the most of my data for any given dividend stock. First thing I want to look at is the payout ratio. I want to make sure that it's something that's in line with how the company's paid out over time, and even better if it's something that's been below the sector median for that time. You don't want to have too high a payout ratio. That is going to put you at a risk for dividend cuts. Nothing that you want. I also want to look at the dividend coverage ratio. Make sure that that's in line. Make sure that this company has a sustainable dividend that's not going to cripple it in the future. Same thing goes for interest coverage. This is more to see just how much interest the company has. Companies don't need to be debt free, but you don't want to have too much debt in the company as that's going to hamper them long term. Last but not least, I take a look at the free cash flow in reference to the dividend yield. This is just showing that the free cash flow is either growing or shrinking over time. You want to see some growth there because that signifies that the company is strong financially. While I'm not a stickler for having to have absolute great value, I do want to take a look at the PE ratio for a stock as I look to add it or add more of it to my portfolio just to make sure that it's not completely overpriced. Once a stock is added to my portfolio, I do have a different valuation tracker that kind of tracks it and compares it to other stocks in my portfolio. But I want to make sure that the PE isn't anything insane. That said, it's not going to stop me from buying the stock if I do want to add it to my portfolio, even if the PE ratio is high. We keep adding to our Excel spreadsheet, tracking everything, and this is going to give us a final grade at the end of everything. The last number that I want to consider is return on total capital. This just shows if a company is making money off the money that it's putting into the business, either from investors or from itself. The higher the number here, the more profitable a company is, the more money they're making with the money they're putting into the business. As you can see with MasterCard, a fantastic example, but I typically look for a number in the high teens. Once all these numbers are put in, this is going to give me a final score. So as you can see, I have some formulas that kind of give different grades based off how the current numbers compare to previous numbers in the sector median. I also have multipliers to make sure that things that I'm really focusing on, like 5 and 10 year CAGRs, are weighted a little bit higher than, say, yield in the short term. And this is going to give us then a final score for any given stock. The final score is going to be out of 1 overall. So the closer to 1 you get, the better the stock is and the more it aligns to what my portfolio is and how I want to grow my portfolio over time. So as you can see with MasterCard, we have a final score just about at 0.7373, so a really high score. It's actually the highest one I have in my portfolio right now. And as you can see, we'll drop down. You can see the rest of my portfolio, some quick snapshot of grades. I'm not going to go in depth with all these right now, but we'll be talking about more of these in the coming weeks. But that is all I have for you guys today. This is how I screen my own stocks to make sure that my portfolio is growing in a way that I want it to. I want to do a more in depth portfolio breakdown in the coming weeks, as well as talk about some of my dividend investing goals and what I want to see out of this channel. But until the next time, though, I've been Average Andy. Remember that the quick path is not always the best path, and financial flexibility can always be in your future.